Hey everyone, welcome to the weekly review. We have a recovery today after Friday's drop due to the 50% tariffs on the EU starting June 1st. Trump delayed it again back to July 9th, and we have a recovery here. We are past the halfway point of the tariff delay, which came on April 9th, sorry. So we have until July 9th to resolve this. Things are not looking that favorable towards tariff deals, but I'll get into that in a second. Question over the next month is what will the market do to front run the outcome of this? Will it be bullish, meaning potentially another delay, or actual deals for the US, which are delays likely, actual good deals are unlikely. So if the market resolves bullishly, I would assume it assumes another delay. Or if the market assumes maybe we go back to Liberation Day tariffs, which I think is somewhat likely. I'll explain why again in a few minutes. But because we have these two very extreme outcomes, a positive one and a negative one, I think the market will choose neither and it will just go sideways. We are setting a high. We have one at 595-ish, and we now have a low at 573, with a potential to go a bit lower, all the way to Liberation Day close slash China deal gap here. Seems unlikely as well. So for now, we have set a range, and I think the we will just move in this range uh, for the next 2 to 3 weeks. As we get closer to the Liberation Day deadline, extension deadline, we might see a breakdown or a breakout depending on the outcome. But for now, we have kind of defined the range. Actually, let me not let me draw it to the confirmed level, not to uh, the theoretical level. So we have this range. When we break down, we can go much lower. When we break out, we can go much higher. Uh, actually, let's actually measure it. So target will be 620 on an upside breakout, maybe a bit lower, like this, 617, 620. I'll just say 620. And if we get a breakdown after consolidation, so to get this, we will need to move in this range a couple of times more. And if we go down, this would be like 550. This seems about right. Okay, and we have multiple examples in the past, like we have the sideways range started from the election gap. We went quite a while before we eventually broke down, and when we broke down, it became resistance. So this was what, November 5th until March 6th. So that's like 5 months almost, 4 months, 5 months. In which we went sideways. And because of the uncertainty and the impracticality of the whole situation we have right now, I think we could see this playing out over a longer period of time as well, with a downside bias depending on the outcome when it does resolve. But yeah, we have since May 25th, 3 4 months. It could be the entire summer duration of going sideways, and eventually maybe break down in September. But of course, it's still a headline market. It depends what Trump does basically, or what the US does. But things aren't looking that encouraging to me because of the whole. Only have one trade deal, which the one with the UK, which was a nothing burger, nothing really of substance written down there. Um, the way the way Trump is pushing this problem, like you need to buy more stuff from the US, but there is not enough stuff made in the US to buy. He keeps pushing energy, he keeps pushing agricultural products, but this type of good is more aligned with trade with a centrally planned economy like China. Like if the it's more like easier to do a trade deal with China on this kind of stuff because uh, the Chinese government can dictate people that not people that companies or entities buy that stuff from the US. But with the EU it doesn't work because it's not centrally planned. Even the trade deficit with the EU is is the sum of the trade deficits of individual countries. The EU doesn't impose trade or any type of behavior on their members. So it's not like you can go and negotiate with the EU as a bloc. I mean, it works in a sense, but not in the sense that Trump puts the problem. His framework is not compatible with how the EU does business or any kind of liberal economy does business. It's free trade. Like, let's say Germany. Germany cannot impose to private companies in Germany to buy more US stuff. It just doesn't work that way. If it makes economic sense, then the free market will buy more stuff from the US. If it doesn't, it won't buy more stuff from the US. Maybe some government trade can be done, like the government buys more energy from the US, but that's a limited subset of trade, and it's not going to solve the problem. Meanwhile, while you can do this with China, because China can buy a lot of energy from the US as a country, not as individual companies, but as a country that imposes that kind of stuff. It's a problem that cannot really be solved when basically negotiating with any developed country like Japan, like anything from the EU, like Australia. So you can't really get good deals in the sense that Trump wants them. Maybe he can get something with China, maybe he can get something with India, maybe with Turkey, and so on. So more autocratic countries that are more centrally planned and where the government can actually impose stuff on economic actors. Now, besides this, uh, the US needs more money in their budget. We just had a big Trump bill passed. It increases deficit. A good way to offset this is getting more tariff dollars. So I think Trump's interest is actually uh, getting back to Liberation Day levels of tariffs on various countries, and that will bring more tariff revenue to the budget. That will create a growth scare that potentially gets long-term yields back down to reasonable levels. We had a spike last week to 515 on 20-year and 40-year. On the 10-year, we went to 462. So these are very, very high and levels way above the federal funds rate even. So that's pretty bad for the US debt servicing. It will become a big part of the budget. So yeah, I think Trump's interest right now is to get back to Liberation Day tariffs, if you believe it or not. As soon as the market catches on, I think we will get a move down. Right now, we're getting the relief and potential for how high we get is like 595-ish, maybe as high as 600, but it seems very unlikely that the market will allow to go higher. So my main expectation is that the market will be reluctant to go lower, it will be reluctant to go higher. And we have set some lines in the sand at the top here, at the bottom here. Whenever we get close to the top, uh, we should get rejected. Like mm, there would not be enough confidence in the market to have a breakout because it will be a significant breakout if we do. We go back down, and until we get a clear sign that we're going back to Liberation Day level tariffs across the board, the market will not break down beyond this level. Extended level is this one. This is also the yearly AVU up, so like 564, 65. China deal gap Liberation Day top. This should be an absolute bottom. But until we get more clarity or we get closer to the deadline of the trade extension, the Liberation Day tariff extension, I don't think we will go above or below these levels. So the market it will likely go sideways for quite a long time, just like we did in the post-election top, many months of going sideways and basically staying in a range. And this is just an example of one. It happened multiple times in the past. I'll go to 4 hour. Like the 2022 top was also like a sideways top, and we we went sideways since November until January, even though we had like a blow off move here that was a fake out. What else? Like also here we went sideways for a while, went sideways for a while. I don't expect this to be as long as um, the election top, but I think we can go the whole of June sideways here, moving up and down a couple of times. We'll see how this plays out. But yeah, the market will be cautious. It won't break out, it won't break down until it gets more clarity. But when it gets clarity, I think it's like a 70% chance we will choose down at some point because my personal take is that Trump wants tariffs. He wants that revenue to come in. Uh, the deals he's making are not really that good. They don't accomplish anything basically. And if the goal is to bring U.S. manufacturing down, tariff has to tariff to bring U.S. manufacturing back. Tariffs have to be at a high level, and they have to stay there for a long time. So this relief period is is temporary in my opinion. And yeah, that's kind of the take. Hope it helps. Have a good one. Bye bye.